more into the markets and what may come next with Bill Lee, Chief Economist at the Milken Institute and former head of North America Economics at Citigroup. Sir, great to have you with us. Many people and many analysts are defining what we've been seeing as a roller coaster ride and a lot of whiplash for the markets. And I think many are wondering, what do we need to price in right now? What are the impacts of the tariffs going to be, not only on companies, multinationals, but also the economy itself? How are you weighing things up and looking through the current noise?
Well, Eleni, I think it's a mistake that many analysts are focusing in on the tariffs themselves as a source of market volatility. I actually think that the issue is much broader, and that is that President Trump was elected on the Make America Great agenda, which includes reducing government to free resources for the private sector, lowering taxes, fewer regulations, and protecting investors that choose to invest in the United States with a tariff barrier. And the tariffs are just a small part of that Make America Great package. And I think the objective of the package has been to restructure not just the United States domestic economy to make it more productive and to rebuild manufacturing, but it's also to restructure the global trading system. All this restructuring has caused a lot of uncertainty. And to me, the source of volatility is coming from a nagging sense that President Trump is using up a lot of political capital to try to get the tariff programs in place. And that, I think, is jeopardizing the possibility of the rest of the package, which is much more important. Fewer taxes, smaller government, and fewer regulations. Those are the issues I think that are facing the markets right now. And that's where
I guess what yeah, it's really interesting because I think what you're describing as well, sort of the restructuring of the economy, bringing industrialization back to the United States, all of that takes time. So you're looking at a longer term perspective, which is important. But then I wonder, do you believe that market participants are overreacting to the news? And then let me ask you this. Why then are US bond yields spiking so extensively, which is showing that I guess the US bonds were always a place of safe haven where people would flock their cash. That's not happening. So what does that tell you? Is this just an overreaction in your mind?
That's a great question. In fact, I think in my experience of the many years I've been on Wall Street and also as being an economist with the Federal Reserve and International Monetary Fund, markets always overreact. You have to assume that. But I think your question is really right on point about the bond market. It seems to be acting differently and with the dollar. And for me, from what I can see, a lot of investors have leveraged positions where they borrowed a lot of money, and they're now subject to margin calls as the stock markets have really taken a big hit lately. When you hit a margin call, you sell the most liquid assets you have. Treasuries are the single most liquid assets in the world, and people are selling that. People are also selling dollar assets as much as they can because the dollar represents a huge liquid market. So to me, these are investor adjustments to the margin calls and the leverage positions. And I think Secretary of Treasury Bessent was absolutely right to say that that's the major force that's in play. Because if you look at the bond markets now, they've calmed down. And it was just that brief moment of raising liquidity that caused this disruption.
Yeah. Okay, they'll calm down for now because we just don't know what will happen next on the tariff front. And I think that's what most analysts are cautioning against. The economists are saying the same thing. They just don't know what the short-term implications are. And I know that you're looking at the long term because you're seeing a restructuring in terms of trade and world trade and so forth. But for people in the United States, here's their reality. Their savings have been depleted. They're worried about future prospects. I mean, they cannot handle this type of risk for the greater good. So then what is your take? Buy, sell, hold? What do you think people should be doing right now?
Well, for those who are younger and have a longer investment horizon, right now stocks are down to the point where there are enormous bargains out there. And President Trump actually has advised people, if you have some cash, go shopping and buy up some assets that are going for cheap. For those who are older and near retirement, they're the ones who already have adjusted the portfolios to be more fixed income in bonds. And I think they should hold tight because this adjustment period should blow over as soon as we see that the restructuring is taking place. President Trump has got a short timetable, but by the time the midterm elections come, he's got to put in place most of this agenda and policy package. And that's why the rush to do things and it's caused some communications problems. And that has been also a source of a lot of the uncertainty.
So what's your analysis on President Trump's tariffs against to China, and then you've got retaliation coming through, and then every day the numbers increasing, and now you've got some exemptions on things that are really important for the US economy. How do you think that's going to end?
Eleni, that's really the heart of the problem, the issue with China, the bilateral imbalances, and also the single source supply chains are things that President Trump is trying to restructure. And I think that the message that China has always been, we need to sit down and negotiate the 21st century trade agreement that is going to create a framework of trade for the United States and China that will be a model for the rest of the world. Right now, the WTO trade system was set up under World War II conditions where the U.S. was the only healthy economy. Now we have countries in the Middle East, Europe, and South America that are rising into the middle class. We need a new framework for trade, and that is what China and the U.S. has to negotiate. It started with the first Trump administration, and I hope that will continue.
Bill Lee, great to have you with us. Thank you, sir.